maybe you can get into the little bit of volatility and premium and that kind of stuff.
Absolutely. Obviously, when it comes to volatility, it's just like when you're picking an option strategy, volatility is a very important gauge on your car, so to speak. In a high volatility environment, which we define in our classes, where we talk about what exactly is a high volatility environment, you don't necessarily want to be a buyer of an option at all. You might want to be a seller of an option, in which case you're letting time work in your favor. When you're a net seller, you're actually taking in premium versus paying a premium. And you want to be a seller of an option when vol is high. And obviously when vol is either to low, you want to be an option buyer. So it's really important to not just understand what the stock is doing that you're trading when you're doing an option. You also have to understand what's going on in the overall market. So there's a little extra steps you have to take. You have to look at volatility of the underlying stock, which is called the implied volatility. But you also have to look at the volatility of the overall stock market, and then compare that to what the stock has done historically and make a judgment call. And that's one of the things we stress in our classes is what strategy to use and when, what tool to use and when. And that's really what gives you an edge. You need an edge when it comes to trading, no matter what you decide to trade. Obviously, picking the right stocks, the right sectors, the right time is challenging enough. With options, the challenge also lies in what strategy to use. And that's the key.